So welcome to the market recap. We're going to go over all the trades that we took this week. In future, we're going to break down exactly what got us in the trade, where we plan to take the trade up to, where we put our stop losses and how we plan to manage the trades. Also, we're going to speak about the volume and what potential opportunities could lead into the following week. And we're going to do this every single Friday, hopefully at 10 AM GMT time. And of course, as always, we're going to be posting these on YouTube and in the Facebook groups, so you can keep up to date with everything that we're doing in terms of the trades that we are taking, and of course other tips and tricks on how to manage your emotions and also manage your money. So 4 trades that we're in so far. The market's not really been moving too much in the directions that we've wanted them to. They're sort of just consolidating a little bit in these last couple of days. The dollar pairs haven't really been moving. It's more the crosses like 𝗙H-𝗹𝗹𝗪, things like that, 𝗙dzie-𝗹𝗹𝗪, that have really been popping this week. As you see, we're not in any of those trades, but the 4 blue ones that you see here are the entered, so we're going to break down those. And if for whatever reason, because not every week's a trading week, if for whatever reason we do these market recaps and you don't actually have any entries to break down, we're going to talk more about the actual current state of the market, what we should be doing. Should we be trading? Should we not be trading? When should we be looking to trade, and all those good things. So not only are you going to learn how to execute when the markets are moving healthily, but you're also going to be able to execute discipline and resistance for trading when you shouldn't be trading, and being able to spot those opportunities when they are untradeable, or they are just as people would call it, quote unquote, dumb money. So you don't want to be the dumb money in the market, absolutely not, because dumb money gets swallowed. So USD CHF, we're going to go all the way out to the daily to start with. You'll be able to get a good understanding of what we're looking for here. Let's just go out to the week. Let's break this pair down from the very top. Now, as you can see here, the dollar versus Swiss franc has been on quite a downward descent, and as you can see here, the most recent peak is the 22nd of April 2019, and we've dropped off healthily all the way down ever since, and we sort of reached a trough here on the 11th of January 2021 earlier this year. That's when things started to pick back up for the dollar, the dollar pairs, and of course US dollar Swiss franc. So that has led to a bull run. Now what's interesting here is the fact that this bull run has broken this high. So what would that tell us? That would tell us on the weekly time frame there can potentially be a new bullish structure. Now if there's a new bullish structure, what would have to be true? What would have to be true is we have bullish structure, just higher highs and higher lows. Very basic, everybody knows that. So the low would be here, up to the top. This is a higher high, breaking this high here, so it's a higher than the previous high. Come back down into this, what I believe is going to be an area of support, which would create what? A higher low. And then as you can see here in the purple, we're just looking to take price action back up to the tops of these highs. Now of course we are expecting price to potentially even reach these areas over time, of course, not too soon, but we're on the weekly chart, so this could take many weeks. As you can see here, if we get the price range, so say just the bottom of these candles to the top, let's take it wick to wick. So as you can see here, that is a lot of pips. Okay, so and that happened in the space of a couple months. So you're talking, typically what happens is, typically speaking, and I say typically with an asterisk to say don't take this as 100% true all the time, but typically what happens is the move up here, if we just take that copy and paste, typically will be the same length. And as you can see here, look how perfectly that matches up. Now that's typically speaking, it won't always match up this perfect, it won't always play out like that, you know, things might come back up, price might come back up to the top of here and then just completely fall off all the way back down to these previous lows. Never ever ever take that as gospel, but typically speaking, the majority of the time this is what happens, and of course this is what we'd be looking for. And we might even just break this into 2 trades. We might hold this if we see really heavy stalling at this level, and then if we do break through, that's what we're looking for, or something along the lines of, if we do get like a mini support zone in here, we use a Fibonacci, and then this would be our entry point. But that typically gives you a good understanding of what we are looking at here. So that could play out over the next few weeks, and we could get a good couple of entries. So if we go down to the 4 hour, you can see here, this is a really interesting area for us because it's in an area of support, and it's backed by this trend line. And then by breaking down the weekly time frame, the higher time frame, of course the most dominant for telling us where the market's actually headed, this is in congruence with our bias. So as you can see here, we entered a few candles ago, I think this was yesterday, can't remember, but as you can see here, we are starting to get that push off now. Candles tell a story. We've had 2 small little rejections, peaks down, we've tried to push up again, we've been rejected back down, came back down again, but now what we notice is we're having small volume. Small volume typically is what we want if we want a reversal. We want small volume, but not only do we want small volume, we also want to make sure that price is still edging up. Boom, edging up, edging up, edging up. Now this is where we expect to break out of this little zone here, this little box that we have. We want to be breaking out of that, boom, and then start making that approach back up higher. So a really good trade. Patience is all we can do now. We've got to exercise patience and manage the trade. As you can see, our stop loss is well out the way. It's not like ridiculously tight here because we're very well aware. These lines are very, very accurate, so I take these very, very seriously, so I make sure they're on the other side. I wouldn't just, for example, if I wanted a long position, it's very, very tempting just to go, okay, get it right tight here, and then you get a really good risk to reward. Sometimes it works, but from experience, the market's a very, very smart place, and it feeds on dumb money. Now, of course, dumb money would be entering too late, once the candle was like a way up here, and then having your stop loss like a way back down here, or dumb money would be just, you know, placing your stop loss right here, and then the market could come all the way up, crash, come all the way up, crash, and if you're entering every single time, taking your money every single time, and then what happens is, if you, and this has happened to me countless times, if I've lost money on a trade, I've in the past gotten a little bit heated, a little bit annoyed, and I've tried to make that trade fit my bias. I've tried to make that trade fit and work for me just because I was angry and ended up losing twice in a row. So please don't make that mistake. If you miss the move, you miss the move. Move on. And guess what? If you really understand the market and you understand the market structure and you've analysed the pair heavily and correctly, there will always be another entry. There will always be another entry if you know where to look and you can understand price action and the behaviour that it's in. There will always be another entry. So moving on to Aussie CAD, and let's go back out to the weekly again. This one, as you can see here, is we've jammed the gun just a tiny bit early, but you'll be able to see what we're looking at here. We've got this sort of, it's kind of like a broadening channel here, and we're moving in an upward fashion. And of course we have had this touch here, 1, 2, 3, 4. Typically the 5th touch is what we're looking for, to then take price back up to the top of these highs. So if we go down to the daily here, it's actually been quite a strong move down yesterday, but towards the end of that move we actually started to see a slowing down of momentum. So I think that this might actually be trapping some sellers here right now because we've had this big momentum candle. We've slowed down quite considerably right at this trend line and in this support zone. We've pushed away and now we're coming back down to retest. So I do expect this for another couple of candles to be a bit indecisive. That's kind of what you want. Just so you know, not too much though, you don't want too many candles sticking, because if it really is struggling to push away, then it shows you that the buying power just isn't there to push the market up. But what we are looking for is, of course, that big push away. Now right now we are seeing a good bearish momentum candle, so right now we're just going to have to watch the market, play it safe and monitor this trade. As you can see here, we've had this push down, and then we've failed to push down. So now we're coming back in to retest these double bottom tweezers here and see what happens. As you can see, our stop loss is well out the way, so if we do get stopped out in this one, it's because we've been wrong. It is not because we have not placed our stop loss correctly, or we've tried to get greedy and make a better risk to reward. So that is pretty much what we're looking for on Aussie CAD. Very, very simple trade, and we'll see how that one plays out. I know some people would probably have waited for a break of this trend line and then maybe even used, so say maybe even used this as a little support, and then had maybe just a break, come back down into an area like this and then pushed off. If that does happen, then of course we'd be right. We might even be able to get another entry depending on the move bullish. So again, we're just going to have to monitor the trade and make sure that we manage our risk, because if we are wrong, then we're going to make sure that we try and eliminate how much we are wrong. Okay, so moving on to Aussie NZD. Again, a little bit of conflicting biases here, because we're in a buy on Aussie CAD and we're in a sell on Aussie New Zealand dollar. But I'm a great believer in trade what's in front of you. If all the signs are there to tell you to take a sell, take a sell. If all the signs are there to take a buy, take a buy. Of course, if you're just starting out, you don't really want to be doubling up on a specific pair. Like say for example, right now we've doubled up on Aussie in opposite directions, which is good and bad. It's good if it works out for us because we are stuck by our rules. We've not just jumped the gun and, you know, thought, okay, Aussie New Zealand dollar is bullish, I'm going to double up on Aussie dollar CAD just to get more, maximise my profits. No, it doesn't work like that. It can work like that, but it's a bad game to be playing a part of. So what you really want to be doing is just trade what's in front of you. If it's in front of you at the time, then execute it. But typically speaking, if you're just beginning, or if you're not really too confident with your money management, or you're a little bit more risk averse, I would stick to the one pair. There's always going to be one that typically stands out. Now normally, if they are pairs that belong to the same category, so for example $2 pairs or two Aussie pairs, typically speaking, they should move congruently. So and it depends what, so say for example we've got Aussie here, and if they're both, Aussie are both the first primary currency in that pair, then typically speaking they would typically move in the same direction. Now if the Aussie was on the second half of this pair, for example, or if the Aussie was on the second half of this pair and it was NZD Aussie, okay, typically speaking, and this was just Aussie CAD, typically speaking, if this was, the Aussie was strong, it would push this pair up, and then if the Aussie was the second on this pair and it was strong, it would push that pair down, so they would move in opposite directions. But just something to bear in mind. But this is what we are doing currently. As you can see, they're both moving against us right now, but we have our stop losses in great places. They're behind very well respected levels, and the analysis is solid and it's been thoroughly checked. So no qualms with that. We're just going to let them run and manage the trade. And last but not least, NZD CAD. Let's go out to the weekly. Let's do a full breakdown on this also. You'll be able to see what we're looking for. And as you can see, we are very well in profit. Now what's happened is we've squeezed price action. Now typically what happens is when you squeeze price action, in this pattern, descending wedge pattern, because it's getting shorter and shorter and shorter, typically what happens is you'll get a breakout. Now that doesn't always mean to say it'll go to the top of this here, the top of the pattern where the pattern began. That's typically where you would take profits, but we noticed this massive weekly rejection. Okay, we noticed this massive weekly rejection. It's closed more than halfway down the candle, and as you can see here, we have fallen off. But what did we really look at for that to happen? Okay, typically we were looking at the lower time frames for this one, not too much the daily. But if we go down to the 4 hour, you'll be able to see here we had this trend line that we drew in that had been broken. So I was thinking, right, okay, we've broken a trend line. This is quite a significant area that could potentially be a shoulder, of a head and shoulders. So we'll have our shoulder, we'll have our head, we'll have our shoulder, and typically that would be the neckline. Now a good entry for people, right, would typically be once you break this neckline, you have that push, you have the pull, and then you have the push. So a great entry would have been here, right, on this engulfing, or maybe just, you notice that this is typically in line with this here, where we've had spikes being well respected, so that could have been a good entry nonetheless. But we actually got in here, just around about this area, because we've seen that rejection, we've seen that nice rejection off of the left head, the left shoulder. Sorry, we've seen that nice rejection of the left shoulder, and that forced us to then get in that trade. Now typically, as you can see, it is moving very well, and we do look like we're going to take profit. Right now we are probably sitting at roughly 64 plus 18, 82 pips profit right now, which is very good. Typically speaking, we could get another entry like this. We could potentially get another entry like this. So that's something we'll look at. In fact, you know what? For the sake of being on a live video, we're going to enter that trade right now. We're going to move the stop loss to entry, right? We're going to move the stop loss to entry, and we're going to get in a second position here. So 𝗙ន់, our entry was 0.89673, so that's what I'm going to make my stop loss, 0.89673. okay, modify, and then what we're going to do is we're actually going to enter this trade, because look, we've had very poor bullish momentum and we are sinking down now. So stop loss would be 30 pips. So I'm just going to go into my lot size calculator, calculate my account size, risk 2%, 30 pips, okay. And then we're 𝗙ន់, so 𝗙ន់, calculate, and then we got our stop loss here. Lot size, so 𝗙ន់, and that's us in that trade. So we're actually in a second position now, and we're going to enter in a stop loss. So our stop loss is 0.89128. And then our take profit is just going to be the exact same, 0.87500 handle. Remember, we're making these numbers round because the market loves psychologically round numbers. So not only have we broken down all these pairs, you've actually got to see live a second entry that just so happened to pop its head at the time of this video. So I hope you've enjoyed that. I hope you've understand how you could actually make some money. So say for example we were risking 2% on this, that would have been 10%, and that would have been 8%. So you could potentially be banking 18% on your account just off one pair of two trades of the same analysis. If you just know how to analyze properly and you can understand price action, this is what these videos are meant to do. It's my gift to you, so you don't blow accounts, you can increase your results and get better at trading. So until the next market recap, we will see you in the next one.